What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today we are talking about how the rise of central bank digital currencies is already here. It's already started. Central banks all around the world are moving towards this. They are planning for it, and the central bank in China has actually already started its pilot program for its digital currency. Now, you've probably seen this from other news sources, and you've probably seen other people talking about this. And so in this video, we're going to do a couple of things. Number one, what you need to know, because there's a ton of stuff to know about it. So we're going to go through some of the basics, the main, most important things that you need to know that will impact your investing, impact how you do business. And so the main things you need to know. Then number two, some of the dangers that arise for you and your investing and your money routing, and also for the system as a whole, some of the dangers that come about from a central bank digital currency being rolled out on a grand scale. And then number three, we're going to talk about one of the things that nobody is mentioning that is one of the main problems with a system like this. So this new Bretton Woods system, the new monetary world order, the new global one world currency, whatever you want to talk about it, they're all talking about the same thing with different titles. Basically, it's all about central bank digital currencies, how they're going to change money and investing in the future. Here's what you need to know. Let's dive in. All right, so in the past, money has taken on many forms. Many times throughout history, money has been credit money, and so that's the use of tally sticks. People would keep, notches on sticks to kind of keep a record of who owed who what, and those sticks would actually trade as currency. If I owe you a favor, and then you need to go do something, buy something from somebody, you can just give that person the favor that I owe you as payment for whatever you're buying from them. And so now I owe that other person a favor. So credit and debt has circulated as money for thousands of years, and arguably before the rise of commodity money like gold coins. But we know that monetary systems that are founded on gold and silver, commodity money, anything that is in short supply that cannot be easily counterfeited or manipulated, those systems tend to produce the greatest wealth in a society. And so anytime you see historical records of debasement of coins or fiat currencies, typically you see cases of inflation or hyperinflation and economic decline. Now, before World War II, most of the world was on a gold standard, so you could take your gold and go anywhere in the world. There was really a one world currency. It was gold, and so you could exchange anywhere in the world with that. But most countries during World War II, they spent almost all their money. And so instead of rebuilding from scratch, they just said, well, America's got a lot of gold. So instead of having our paper backed up by gold, we'll have our paper backed up by dollars. And then if we want, we can always redeem those dollars for gold. That system lasted for a few decades until America got too greedy. They printed a lot more dollars than they actually had gold to back it up. And now since then, the rest of the world has been on a fiat standard where every country just has their own paper money. So there's nothing that backs it up except for debt. And so right now we're living in a credit or a debt-based monetary system, and that's actually not new. We've had historical cases, anthropological records show that there for thousands of years, we've had examples of credit-based money systems, debt-based monetary systems. Well, it looks like this debt-based money system is coming to an end, and central bank digital currencies, CBDCs, these are what's kind of paving the way for the transition away from a debt-based money system. Now, I want to pause here and mention everything that we're going to talk about here. Every single point itself could be its own, hour-long seminar, lecture, video, whatever you want. There's a lot to be said about each of these topics. And so I will be incorporating information from, this whole entire movement towards central bank digital currencies, the new Bretton Woods system, what we need to, the changes in the monetary landscape that are coming. I'm going to be talking about this for a long time in most of my videos. And so we're not going to explore in detail every aspect of all of these points. So just keep in mind, I'll be talking about all of these things going forward. Essentially, though, the age of paper money or the age of debt-based fiat is coming to an end, and China has beaten the world to the punch by being the first country to roll out a trial or a beta test of its central bank digital currency. So what is it? What is a central bank digital currency? Well, number one, and this is the most important point that you need to take away from this, it's not a cryptocurrency. It's not going to compete with Bitcoin or Ethereum or Ripple or any of these other things. It's not a cryptocurrency. One of the main points of, a cryptocurrency is that it's decentralized. So Bitcoin is not controlled by any single entity. It's controlled by the entire decentralized network. There's no permission needed when you want to transact in Bitcoin. You can send any money to anybody, and transactions are permanent and final. They can't be taken back, and there's a hard limited supply of the total Bitcoins. There's not a central authority that can change that. So a central bank digital currency is pretty much the opposite of that, and it's very similar to just the dollars that you have in your bank account. It's still going to be centralized. It's still going to be controlled by the central bank. It's still going to be you'll need permission to make certain transactions, or all transactions actually, and they'll still have the power to stop transactions just like they do today, or to take them back. And they will have the authority or the ability to increase or decrease the total supply of dollars in the system. So none of that is going to change. It's not going to become more like Bitcoin or even compete with Bitcoin in that manner. From a user standpoint, you're going to notice very little difference from just keeping dollars in your bank account to keeping your central bank digital currency dollars. Now, there's one big exception to this, one big difference, and it's the fact that it bypasses the banks. Instead of having your bank account with, Simple Bank or Chase Bank or Wells Fargo, you're just going to have a wallet that is held at the central bank. So you're going to have a Federal Reserve wallet or a Bank of Japan wallet. And so instead of using a bank account, you're just going to have an account directly with your central bank. In the case of the United States, the Federal Reserve. Now, in the case of China, the way that they did this was they said, hey, we're going to give out a bunch of money. It'll be based on a lottery. So you've got to download the app and then you hit the button to see if you win any of the money for our trial of our new central bank digital currency. And so they got a ton of people to download the app, and then some of them got some money, and they were able to use that money to spend just like they would spend their money like anybody else spends their digital money. You swipe your debit card, you use Apple Pay, whatever you want. Now, the one restriction on this was that they couldn't use this new money to purchase any other form of money. So they couldn't go buy dollars with it. They couldn't go buy gold with it. And so this is an example of what I'm talking about, where it's you need permission on the types of transactions you can do. We already have that in most of the world today, especially in America. Banks and bank accounts and businesses. It's really hard to operate inside the banking system if your business has anything to do with guns or gold or marijuana. There are a lot of restrictions on that, and they already watch and see all the transactions that go through because they monitor, the banks monitor this, but it'll essentially be streamlined and all put together into one single cohesive platform underneath the central bank, bypassing all of those layers that are, in the normal banks. And so this will be much more efficient, theoretically, to be done, centralized, because they'll be able to see these are the transactions we want to allow. These are the transactions we don't want to allow. Now, one of the benefits for this that the central bank will be able to do is that they'll be very, very easily able to inflate the money supply, because they can just credit certain users' accounts with money. If you make a certain amount of money or under a certain amount of money, they can credit your account with more money. They could have expiration dates on these digital dollars that if you don't spend them by a certain time, they just go away. And so this will give them much more control to have some outcomes that they want to see in the economy, whether they want to increase the amount of spending to increase the velocity of money, versus now they don't have as much control. They have more of a blunt tool with their interest rates and their quantitative easing. They rely heavily on the banks to lend. And so this would completely bypass the need for banks to lend to cause some of the inflation numbers that they want to see, because they can directly credit users' accounts with money instead of relying on banks to inflate the money supply through lending. Now, the other way that quantitative easing currently inflates the money supply is through government spending, because they're basically funding government spending. But then you run into political gridlock like we're seeing right now, where it takes forever for a bill to pass for spending to happen. And so this would allow the central bank to basically say, we don't need to wait for Congress to spend this or Congress to pass this bill. We're just going to credit users' accounts with, $1,000 as long as they made under, $100,000 this year. And they could do it like that. Now, this brings up the question of legality. And so, yes, in order to get to this point, what I'm talking about here is far down the road. It's not something that would be able to start happening overnight, at least in America. China is a little bit faster and more streamlined on this because they don't have the issues with the political gridlock. But at least in America, some of these things are a little bit further down the road, at least a couple of years down the road. Doesn't look like they'd be able to be rolled out that fast. But it does bring up the question of legality. Like, is the Federal Reserve allowed to do this? And technically, no. But it's not really a question of whether they're going to do this. It's more of a question of how they're going to do this. Because with the amount of financial rot in the system right now, and the areas we're going to start seeing collapse and crashes, there's going to be more and more of a need for fast, immediate reactions to things without having to rely on the political system to churn out these decisions, because it's just not fast enough. And so will the Federal Reserve just more and more, like they're already doing, more and more start to ignore the Federal Reserve Act and the limits that Congress has given them on what they can do? Maybe. That's certainly possible. Will the Federal Reserve Act be revisited and Congress just allow the Federal Reserve more powers to do certain things? Absolutely, that's also a possibility. Will the Federal Reserve just be folded, kind of under the Treasury so that there's more direct control of this? Certainly, that's also a possibility. And so there are a number of ways this could unfold. Not really a question of if, it's more of a question of how. This will also allow the central bank a lot more control and power over directing resources in an economy. Because if you think about it, every single transaction that ever takes place, half of that transaction is done with money, right? And so one of the criticisms from an economic perspective of why communism fails is because they don't have the right information, because it's very difficult to make sure that you're directing resources the right way, in the most efficient way, if you don't have all of the correct information coming to you. And so with wrong information coming to you, it's very easy to make decisions that will cause massive errors in pricing and resource allocation, that you could have way too many shoes being made and not enough jackets being made. So this would give the central bank access to a lot more information so that they can use basically a surgical approach, a scalpel approach, rather than just a blunt tool of interest rates or quantitative easing. One of the ways that they would be more targeted with this is through taxation. And so technically this could, end up abolishing the IRS or completely changing the way the IRS works, and that you wouldn't need to have, that end of year taxation. You wouldn't have to, you could very easily do return-free filing, and transactions, income, expenses could either be taxed or deducted or credited at the time of the transaction taking place, so that it could be dynamic. You wouldn't have to rely on new tax bills coming out every couple of years. You could dynamically, based on the needs of the economy, change how taxes are given or taken on certain transactions. If the information coming in from all transactions shows that there's excess or froth in one area of the economy, they could immediately levy a tax on those types of transactions and redistribute some of that money into another area that has some slack or some capacity, in order to realign the incentives in order to keep a balanced economy. And so it drastically increases the amount of information coming into the central source, which theoretically would give them the more ability to more efficiently and effectively control an economy. The second thing it does is that it allows them obviously more control, because if you have all the right information coming in, that's useless to you unless you can actually do something about it. This is one of the reasons why their blunt tools don't work as much, having to rely on the political system to churn out the fiscal results, the fiscal policy, because that's more of a blunt tool. There's more gridlock. Things that need to happen won't happen. And so this is one of the areas that a place like China technically has a little bit of an advantage, because from an effectiveness standpoint, or from a decision-making standpoint, they don't have to wait for a gridlocked system to allow something through that will appeal to all of the special interests on both sides. If somebody with the right information coming to them sees something need to happen, boom, they can make it happen. Now, this obviously presents some problems, because yes, there's a lot more information coming in, but just because you have the information about what transactions and how much money are going somewhere or not going somewhere, is that enough? And here's where a story comes in about the best burger chain in America by far. There are a lot of burger chains. There's Five Guys, right? There's Shake Shack, there's Habit. By far, though, without question, it is not up for debate. This is actually a fact. It's not opinion. The best burgers out there are In-N-Out burgers. There's no question about it. And this is not my opinion. This is an objective fact. In fact, Anthony Bourdain had said multiple times that his favorite restaurant, not his favorite burger place, his favorite restaurant in all of Los Angeles, In-N-Out Burger. Now, if you've ever been to In-N-Out, you probably know that they have a secret menu. And one of the things on their secret menu is called animal fries. Now, animal fries are French fries. They put some of their sauce on them. They put some grilled onions on them, and then they melt some cheese on top. If you've ever ordered animal fries, though, you know they're actually pretty pricey. Their normal fries, I think, are somewhere around $3, and their animal fries are like $6. Now, if you've ever done some digging, you'll notice that it costs nothing extra if you order fries with the sauce. It costs nothing extra if you order the fries with grilled onions on top and sauce. But once you add the melted cheese on top, that's what doubles the price. So I did some digging into this, why In-N-Out would ever charge so much for animal fries when you can, as long as you just get rid of the melted cheese on top, it's the same price as normal fries. And it's because of the time that it takes to melt the cheese. They went through years of experimenting and precisely dialing in the amount to charge for animal fries so that, number one, you wouldn't end up with nobody buying it, because if you charge, $15 for animal fries, nobody would ever buy it. But if you charge, only 50 cents over your normal fries, then everybody will buy it. And the time that it takes to melt the cheese means that their lines would be way too long. And so they dialed it in, and they got it to the point where if they charge somewhere around $6 for their animal fries with the melted cheese, there's still enough people can get it that want it, but there's not so many people buying it that it makes their lines too long. Now, this is an example of one of those decisions that can only be made at the local level. And this is made with information that can only be had at the local level. This is information that's not going to come through to the central bank if all payments are routed through a central bank digital currency wallet. And so the algorithms and the people who were looking at this would look at this and say, that's too much money being charged for animal fries, and they would cause the price of animal fries to change. And this would then cause a massive amount of lines to show up at In-N-Out due to the fact that everybody starts ordering animal fries. And then there would be a severe drop off in the amount of customers that would go to In-N-Out because the line is just too long. And then In-N-Out's revenue and profit would drop dramatically. They would have to start laying off employees because there's just too many people ordering animal fries. They can't get through their other orders for their higher revenue fast enough. And the business could actually go under from a simple change that a central authority without access to all the information, even though they have a lot more than normal, they didn't have access to it all. That kind of decision can't be made from a centralized authority. That can only be made at the local level with all of the right information. Now, I don't think that the Federal Reserve coming out with a digital dollar would actually dictate the price that In-N-Out could charge for animal fries, but it's an example of how decisions need to be made at the local level. And the more that they are, the more decentralized systems are, the better they operate. And that even if you have all the information possible from a central standpoint, you still can't make decisions that are more effective than allowing them to be made at the local level and centrally. And the more centralized we become, and the more that information and control of the monetary system and transactions and banking and income and expenses and taxes, the more that's pooled and controlled into the hands of a few, even if it's done with algorithms, the more it's going to cause unintended consequences like In-N-Out going bankrupt because you didn't know how long it took for cheese to melt on animal fries. Now, there's one thing, I promised you one thing that I would mention to you that nobody is talking about, and this is actually why I think it will take a lot longer than a lot of these people are talking about. Raoul Pal, Mark Moss, George Gammon, Marco Whiteboard Finance, Max Kaiser with the Kaiser Report, just to name a few. This is something that nobody who's talking about central bank digital currencies is mentioning, and this is the fact that governments are incompetent. Payment routing systems are incredibly complex, And when you're trying to roll out the technology that it takes in order to create a digital wallet for a country, that's orders of magnitude more complex than rolling out something like, I don't know, healthcare.gov, and we all know how that went. This is why there have been so many cryptocurrencies rolled out and so many of them fail, because it's an incredibly complicated thing to do, number one, and then to do it effectively where it actually works well, that's a whole nother level. And so I fully expect governments, and especially in America, I fully expect them to try this, and I fully expect it to fail, and I fully expect them to keep on trying and refining, and it just takes a lot longer to get to the point where I'm talking about all these like utopian or dystopian really end game scenarios where every transaction is controlled and monitored and watched by a central, the central bank, the Federal Reserve. I don't think it's possible. The incompetence is too high for something like that to be rolled out effectively within the next, 6 months, 1 year, 2 years, 3 years. And even as they do roll this out and make it more effective, make it more efficient, it starts working and they start, forcing people to use it, or number one, they'll get people to use it by just offering free money if you use it. But number two, then once it's widely adopted and people are using it, then they'll start to legalize it and enforce it that you can't use any other forms of money. What that process does is it provides more and more value to things like Bitcoin, gold, silver, commodities, things that exist outside of the technological system that can be tracked. It produces a lot more value on those things. And so in order to prepare for this before we start getting to that point where it, starts to drive up the price of things like Bitcoin, gold, silver, hard commodities, before we get to that point, the thing to do to prepare is to start putting your money into those things outside of the technology system. So, hold your gold physically. If you hold unallocated gold through, an ETF or something like that, that still is going to exist inside the system, and it can technically, further down the road, it can technically be punished, and you can have your wealth eroded by holding things like that inside the system. So start to get yourself outside the system before it's too late, because once it's too late, it's going to be next to impossible to get your money or your wealth out of that system into some of these things like gold and silver, because even if some of these businesses still exist, you're not going to be able to swipe your debit card transactions to these types of businesses, or in order to purchase certain types of things like gold or Bitcoin will be declined. So again, I think this is a lot further away than some people are saying. I know it's already being rolled out in China, but in America, we're not in China. In America, our the execution factor and the speed of change is quite honestly a lot slower in some of the in countries like America than it is in China. And we already know that the way that they're doing it, you can't go buy dollars or gold with your digital money in China. And so the sooner this stuff starts to happen in America, the more that's going to start to make the price of Bitcoin, gold, silver, and hard commodities just start to go up, and the more value it will create to anybody who is able to get their wealth outside the system as soon as possible. So that's all I have for you today. I understand this was more of a broad overview of central bank digital currencies. I'm going to be talking about these kind of things more in detail for a while to come, because this is the direction that our world is going. And so stay tuned. If you like the content, subscribe so you can continue to see more of it. As always, really appreciate you guys. Have a good day.